Okay, so we're talking about the morning star pattern, right? What did I just say? It's a bullish reversal pattern. What other thing did I mention?
The first candle in this pattern is always a sell candle, which shows the presence of sellers in the market.
Okay, thank you, ma. So the morning star pattern, like I said, is a bullish reversal pattern, right? And it contains three candles. Now, of the three candles, the first is always a sell candle that indicates the presence of sellers in the markets. First up. Now let's go on. The second candle is a smaller candle, which could be another small cell candle, or it could even be a doji, or it could even be a doji, or even a small buy candle. Comma. It could even be a small buy candle.
Okay.
As long as, and this is the most important thing, as long as it indicates that sellers were unable to push the prices lower. Are we there, man?
Yes, ma'am.
While the third candle is a bullish candlestick that shows the presence of buyers taking over the market. And the body of this candle can close above the first sell candle, can close above the opening price of the first sell candle, comma, or at least about 75% of the sell candle. Full stop. Once we've written that, let me explain.
Yes, ma'am.
So what am I trying to say? Of course, the market must have been selling before you suddenly saw this pattern. Because of course, the first candlestick in it will be a sell candle. So let's say you saw a sell candle, probably two sell candles before the last sell candle you saw. Then you now saw, remember, a sell candle closes below. Who remembers that?
Yes, ma'am.
So
Yes,
what it
ma'am.
means is if this was the closing price of this candle, the next candle following this candle still did not close below this same opening closing price. As I would say, the second candle will show that buyers were unable to still push the prices lower. Let me adjust this my drawing. You know, this one is looking as if it closed lower. But in a real morning star pattern, the next candle that follows it, whether it's red or blue or whatever color you represent your buy or sell candle with, the point is this candle's body, you can see this still the closing. If this was a sell candle also, if it closed here, can you see that it still did not close below this, right? What it means is even though sellers were still in the market, they still could not push price lower than this previous high. So at this point, it's starting to tell me that the sellers are getting weak because they still could not push it lower than the previous low. So at this point, this candle could be a bearish. If it's a bullish too, what does this tell me? Remember, a bullish candle will open below, right? And close above. So let's say this was a buy candle. What it means is this opened right here and closed above. So meaning the buyers came in and still pushed the market a little bit, meaning the sellers still could not close pushing lower. So at this point, it's already showing that the sell trend is weakening. And the third one needs to be a bullish candle. So even if this one was a doji, remember, doji 2 will show you what? What does doji tell you? Remember, I told you when we're writing the notes on doji that doji will always tell you that the previous trend that was coming is likely losing strength, is it not? So if the is getting weak, exactly. So let's say the sellers were the one in the market before now, and all of a sudden, instead of pushing the prices lower, I see a doji. It's simple. They couldn't push lower again. And then the buying candle now surface. At the point where we have this doji, the selling trend was weak, and probably the buyers too were not strong yet. Remember, people are always waiting to buy around the support. So the market just got to the support. Probably we are still waiting. You know, a lot of people are watching out before putting their money. Now, when they eventually put their money and there is much momentum, what you now see next is a buy candle evolving from there. Now, at that point where you have this buy candle, it tells me now that the buyers are stronger. So in most cases, you could see the buy candle closing above the opening of the sell candle. Remember, the sell candle opens at the top. Who remembers?
Yes, ma'am.
So good. It could be closing above it, but sometimes it still doesn't close above it, right? You could have something like this. It's a bit lower. That's I say at least 75% of the body of that candle. So what it still means is, imagine from this point, this low where the seller stopped, the buyers were able to push up to this point. So at this point, of course, it tells me that the buying force was strong to come the way up, right? So at this point, what it means is the buyers are now taking over. That's why we call it a bullish pattern. So sometimes your candle might look like this. It might not still swallow this. Do you get? But as long as at least it covers about 75%, don't mind this mic drawing. This mic drawing is not looking like 75%. But if it gets to at least 5% of that candlestick, then you can still say, okay, this is a morning star pattern. Now, how do you trade it? It's simple. You enter for a buy. Write it down. You enter for a buy on the close of the pattern. You enter for a buy on the close of the pattern. Are we together? Now, note where this pattern occurs in the market is very important. You don't just say, oh, I've seen a morning pattern, I want to jump in, right? It's always better you find it around. So write it down. It's better when you find this pattern around the support area. Around the support area. Or still at the end of a downtrend around a support area. Still, so everything has to still do with the support area. So in the case where you see that around the support area, then you could now trade the pattern, right, by buying. That's one way to trade this pattern. Do we understand? So I won't just go and trade it because, oh, they say the market's morning star and I see it just anywhere. No, I want to see it around the support zone before I buy. So meaning I take this buy on the close of the third candle, right? Once the third candle close, I place my buy. Do we understand that, man? So that's about the morning star pattern. Now, the opposite of the morning star pattern is what we call the evening star pattern. You can write that down, the evening star pattern. Evening star pattern. Are we together?
Yes, ma'am.
Totally.
The evening star pattern is a bearish reversal candle pattern that also consists of 3 candles. That also consists of 3 candles. Full stop. The first candle is always a bullish candle that indicates the presence of buyers in the market. And the buyers attempt to push the prices higher. Let me know if I should proceed.
Yes.
Okay. The second candle, of course, could also be either a bullish candle or a bearish candle. And it can even be what, again, based on what I mentioned.
Doji.
It could be a doji also, yes. So it's always a small bodied candle. You can put it that way. A small bodied candle that could be bullish or bearish or even a doji. And it shows the ability of the buyers to continue to push prices up. It shows the inability of buyers to continue to push prices up. First up. Are we there?
Yes, ma'am.
Yes, ma'am.
While the third candle is always a large or bigger sell candle that shows the seller's ability to push the prices down. Stop.
So in other words, ma, the third candle, both bullish or the bearish pattern of this morning and evening start indicates gives a confirmation.
Yes. So onto the third one, because if the third candle doesn't form, you don't really know what's happening. Do you get?
Yes.
In this
Yes,
case
ma'am.
now, for this bearish, the first is bullish. The second could be anything, but it has to be small, right? While the third one will now tell you, oh, the sellers are in place. So now, right, notes. When you find this pattern around resistance zone, excuse me, when you find this pattern around the resistance zone, it shows the intention of sellers to keep pushing prices lower. That's one note. Now the second one, should I proceed?
Yes, ma'am.
Yes, ma'am.
Notes. The bearish candle, for this pattern to be valid, the bearish candle can close below the opening price of the first bullish candle. and close below the opening price of the first bullish candle, or at least about 75% of the bullish candle setup. Are we together?
Yes, ma'am.
Yes,
So
ma'am.
now write notes. Any candle pattern you're trading, always trade the one that goes in the direction of the trend. That's the most important thing. If you don't want the pattern to fail, most often, you want to trade the one that goes in the direction of the trend. What do I mean? If you're in a downtrend, you know, the trending move we want to trade along is to look for sells, right?
Yes.
We want to enter on the sells. So if I now see this evening star pattern in a downtrend, probably after the market must have been pulling back. Remember, the first candle in this pattern is a buy candle. So what it means is we're probably having a buy pullback, right? And this pattern now got to the resistance zone and occurred, and we're in a downtrend. We have been waiting to sell. I will sell with better confidence. As against seeing this bearish pattern, this evening star in an uptrend, right? Remember, in an uptrend, if you're now selling in an uptrend, you're going against the direction of the trend, is it not? The pattern may fail if buyers decide to
Yeah.
push above that resistance and break it up. So whatever pattern you're trading, first of all, you can't trade any candle pattern alone. You can't just go into the chart and say, oh, I saw an evening star, let me sell. Oh, I saw a morning star, let me buy. No. Anyone you're trading, it has to be in confluence with other factors of trading. Number one, what's the market trend? What's the structure looking like? Where are we presently in the market? I want to buy, I want to sell. Okay, great. I see this pattern, it heads in my direction. I buy and I sell. Do we understand now?
Okay.
Yes, ma'am.
So the assignment is this. You would go on the charts, look for the scenarios where the market played out this way. Just follow the characteristics of the candle I gave you. Trust me, you can't miss it. And one trick I can give you, you can always look for them around the support or resistance zones. When you see these three candle patterns, you would most likely find them around there. Do you have any question on this candle?
Not on this candle, ma'am.
Okay, so which candle do you have it on?
No,
Where
no,
you
not
send
question on,
okay.
not
It's
question on the candlesticks.
okay.
Uh,
It's clear and
uh,
direct. Now another thing before lest I forget, you know, there are candles and there are a lot of candle patterns, and some are more stronger than the other. Hope you know that. So I don't really consider this a high probability setup. Does it mean it's bad for trading? Of course not. Do you understand? But over time, when you practice, probably you're trading the pattern 70% of the time. Probably you've picked 10 trades with this pattern. You now say probably the win rate is like 6, 7. It's still a good win, is it not? But some you probably use them and you discover their win rate is like 9, 8. You know, there are some you would lean more to than the other. Personally, I don't trade this. Does it mean it's bad? No. Now, one trick I want to give you is you might have a higher win rate when you combine it with a trend as against the trend. You get so sometimes you have this opportunity. You could see it on the 1 hour time frame and you could trade it. It could be on the 4 hours, you could trade it. You could be on the daily, you could also trade it. Unlike the engulfing, I told you is better on the H4. Remember? But this pattern, you could see it on the 1 hour and it will still work out for you. So I hope you noted those points I mentioned.
Yes, ma'am.
Yes. So, Mr. James, any question?
yes, ma'am. But I would say you should
Is it
send the
about candle
record.
pattern? Hold on. If it's not, I want to stop the record. Is it about candle pattern?
It's not.
Okay. This class was for this. So